Peter Lynch's One Up on Wall Street Investing Secret. How to spot winning stocks. Before Wall Street, what if the greatest investment tip of your life was sitting right in front of you? On a shopping receipt, in your child's bedroom, or the food court of your local mall? No charts, no hedge fund algorithm, just your eyes. Peter Lynch believed that regular people, not Wall Street insiders, often see tomorrow's big winners first. In One Up on Wall Street, he showed how anyone can spot opportunity by paying attention to what they already know and use. Let's walk through the story of this unshakable belief, how it came to be, and how it helped Lynch build one of the most legendary portfolios of all time. 1. Lynch's starting point. Peter Lynch didn't come from a family of investors. He worked as a caddy at a golf course, overhearing conversations of businessmen. That's how he got his first real exposure to finance. He wasn't born into the world of investing, he observed his way into it. Later, managing the Fidelity Magellan Fund, he took it from $18 million to $14 billion in just 13 years, averaging a 29% annual return. That's not just impressive, that's historic. But here's the twist. Lynch never claimed to be a genius. He said the real edge belongs to everyday investors who know what's happening before analysts do. The power of everyday insight. Here's a story Lynch often told. His wife, Carolyn, walked into a mall one day and noticed something strange. The Limited, a women's clothing store, was always full. People were buying. The bags were everywhere. The buzz was real. She came home and told Peter, "This store is on fire." He took a look. The financials looked solid. The growth potential was there. He invested early, and it paid off massively. This wasn't analysis by spreadsheet. This was common sense investing. And that's the key to Lynch's philosophy. Invest in what you know. You eat at Chipotle? Love their food? Check the stock? Your kid's obsessed with Roblox? Maybe it's time to understand that business. Your office just switched to Zoom before anyone else did? That's not trivia. That's a signal. 3. But observation isn't enough. Now, Lynch is clear about this. Just liking a product isn't enough. Step 1 is observation. Step 2, research. You ask, is this company profitable? Is it growing earnings year over year? Does it have too much debt? Do I understand how it actually makes money? This is where many investors fall short. They stop at, I love this brand. But loving isn't investing. Lynch teaches us to connect our curiosity to due diligence, to go from gut feeling to informed conviction. The categories of stocks. In his book, Lynch breaks down companies into categories. Slow growers, like utilities stalwarts, big stable, like Coca-Cola fast growers, smaller companies expanding rapidly, cyclicals, rise and fall with the economy turnarounds, struggling companies that could bounce back asset plays, undervalued due to hidden assets. Knowing the type of company you're investing in matters. A fast grower has different risks than a stalwart. A turnaround might soar or collapse. This framework helps you align your expectations. It keeps you grounded. 5. Mistakes are part of the game. Peter Lynch openly admitted he made bad calls. He said, "If you're right 6 out of 10 times, you're doing great. You don't need to be perfect. You need to be consistent. You need to stay curious. And above all, you need to stay invested." Timing the market? Lynch hated it. He called it a loser's game. Instead, he believed in holding good companies through ups and downs, letting compound growth do the heavy lifting. One stock can make up for many small losses. So if you're patient and selective, you'll do just fine. 6. The heart of Lynch's wisdom. Peter Lynch's lesson isn't about complexity, it's about observation, curiosity, and trust in your own experience. You don't need a PhD in economics. You don't need to work at Goldman Sachs. You just need to look closer at the world around you and do your homework. Because in Lynch's world, the next big investment isn't found on Wall Street. It's found at your kitchen table, in your shopping cart, or at your favorite coffee shop. You already have the tools. You just need to learn how to see and believe that what you notice matters. If this story opened your eyes to a new way of investing, don't let it end here. Like, share, and subscribe for more timeless lessons from the legends who mastered money by mastering their mindset.